Okay, we are live. Prospero.Ai stock market live streams. Welcome everybody back into the stream. We have a lot of exciting events occurring in the market, a lot to talk about today. You have Stephen and Matt here today. We're going to tell you some of the topics we're going to be discussing before jumping into those. So without further ado, Matt, what's on the docket today for you?
Yeah, so we're going to start off just for a few minutes when George shows up. We're going to talk about the newsletter. We titled the newsletter Building on a Swamp. It was George's idea, just the idea that the market is so incredibly volatile right now. We don't know what kind of foundation we're building on. So we'll unpack that a little bit. And then, when George and I talk about the newsletter, he always throws some ideas at me. And he basically gave three scenarios that he thinks the stock market is going to play out over the coming days and weeks. It's going to do one of three things. I found him personally very interesting. And so he's going to unpack those a little bit. I think it'll be a good time.
Yep, that sounds great. We got our first comment from Nissan. Hey guys, no airlines this week. Can we talk about SMCI? Yes, we'll be sure to get into SMCI. I saw a lot of the airlines are struggling, which is one of the topics I'm going to bring up today with the global IT outage we saw last week that CrowdStrike, one of their software updates introduced. It touched a lot of industries. So we'll be discussing what that means. Obviously, CrowdStrike stock has been hit pretty hard since this happened, down 25%. So we'll discuss that in detail. But yes, Nissan, we'll talk about SMCI too. No worries there. Because we're also going to be discussing another AI chip company. You may have heard of them, NVIDIA. They're working on a new version of their chips to get around some of the China export bans that the USA currently has in place. We'll talk about what that means for NVIDIA and the AI chips going forward. Obviously, we saw a lot of those stocks get hit last week, and a lot of them are recovering today. So we'll talk all about those companies. And this is really we had some big bank earnings already, but this is really the kickoff of earnings season this week. So we have a lot of big companies. We'll discuss a few of them. We have Alphabet, Tesla, Chipotle, some of the favorite stocks that we talk about on this channel. So we'll go into those companies and what their earning means for them this week. Then if you were here on last Wednesday stream, I believe, we talked about VF Corp selling Supreme brand at a loss to a company named EssilorLuxottica, which is the Ray-Ban maker. We have Meta in talks to take a 5% stake in that company now. So we'll talk about what that means for Meta. You probably didn't think of Mark Zuckerberg as being a fashion industry leader, but maybe he's starting turning over a new leaf. Then something I like to do in these openings is I'm not going to tell you the stock that this story is about. You'll have to stick around in the stream to find out. But you can take your guesses right now. If anybody guesses correctly, I'll let you know. This stock is down 95% in the last year and 75% in the last week. So if you own the stock, you'll probably know right away because you'll feel it in your pockets. But we'll tell you what to learn if you have an investment that has that kind of a move, and how to avoid maybe getting into investments in the first place that perform that poorly. Obviously, the Prospero signals are a great way to start for that. And then last but not least today, we are going to discuss a little bit of crypto. There's a big event this week happening in the crypto space. There's a Bitcoin conference, I believe, in Tennessee, and a lot of big speakers. Donald Trump is set to be speaking. We had a lot of hype going on over the weekend in the crypto Twitter space. So we'll talk about that and maybe some stocks that you can play off of the crypto cycle going forward. And then, like usual, we'll finish off today's stream with the model portfolio update and maybe writing of the other letter as well. Oh my gosh, couldn't be more perfect timing today. We got this down to a science. Welcome, George, to the stream. Hello.
Hey, how you doing?
We are good. We just finished up running through all of the things we're going to be discussing today. We got people tuning into the stream, but I think without further ado, I'll let Matt take it over and kind of discuss the newsletter topics. And we'll start there.
Yeah, so we introduced the newsletter just a second ago, but I want to make sure at some point you guys talk about Elon Musk's tweet that he tweeted out yesterday with the blue eyes, like it was like a cryptic crypto message or something. So I'm interested to see if George has any thoughts on that. But so yesterday we entitled the weekly newsletter "Building on a Swamp," and the idea behind that is that this market is incredibly volatile. It seems to be doing one thing one day, and the next day it does something completely different. We don't know what foundation we're on. As George and I talked about it, George gave me two examples of some kind of shifting sands of foundation we're dealing with. One would have been kind of the small cap run that we saw last week. All the historical metrics and the technicals were pointing to a small cap breakout, and it did over the course of a day or two. But then everything shifted, and we went to a very quick flight to value. We saw that in our metrics, kind of in our cap analysis. There was a flight to value stocks. And so, are we risk on? Are we risk off? It's hard to tell. There's a shift in 1 week. And then the other example that George gave me was Taiwan Semiconductor. They had their earnings. They crushed earnings pretty much on every level, and then the stock dropped. And so here's the question, George, I'd love for you to unpack for folks is, man, what's going on in this market, and why is it so volatile?
Well, I mean, I think why we titled the letter "Building on a Swamp" is that markets are always kind of tough, and I think we always are quick to say that you got to respect the market, you got to respect who you're up against. But last week in particular, we had kind of like a semi-rotation roll in to, obviously a comment from Trump that scared a lot of people, roll into a massive outage from CrowdStrike. Yeah. So, rarely do you kind of have events just kind of cascade into each other like that. So I think obviously you saw people pursuing different strategies based on what they were seeing. And also there's a lot of, when we talk about this, a lot of feeling each other out amongst institutions, amongst algorithms, as things like this happen. So I think what we really were seeing last week was a lot of people trying to figure out what each other are going to do. And that always manifests in sending the market in a lot of different directions, because especially whether it's algorithms or people, the way that they kind of figure out what is going on is they'll, stress test the market in different ways. They'll buy big blocks of shares to see if they can send a stock up that, that they want to kind of see if other people can catch on to. Same thing with shorting. And they're just going to kind of see like what kind of momentum the market is going in. So I think we saw a lot of that. I think, in terms of the move to value, I think that the market was pretty decided that there was somewhat of a rotation going on. And then, I'd say, especially when the CrowdStrike thing happened, in addition to everything else, that was, people just tend to go to value when they're worried about how the market's responding in general. So I think that's what we saw during the end of the week. We obviously put on some pretty heavy, hedging, as well as kind of a bet that tech was going to do better. Some of the things like in terms of, technology or technology adjacent, things like Apple, Meta, and Tesla were better bets than, SMCI, which we can talk about in a second, but we'll get through all the questions first.
Yeah. So
we'll get through Matt's questions first.
Yeah. So one of the things I love working with George on the newsletter is I always learn something every single week. I'm a student of this. I'm fascinated by it. And so inevitably I learn things, which hopefully you are too, through the process. But one of the things that George laid out was 3 scenarios, 3 different paths, if you will, on how the stock market is going to move forward, in his opinion. The first one was the darkest one, and that AI was, that everything we've experienced over the last year and a half, that this bull market was an AI momentum play, and that we're in the midst of a reversal, and that a bear market is coming. That is entirely possible, according to our CEO. The second scenario was that institutions saw this as an opportunity. You just unpacked it a little bit, George, that we've had new highs. Institutions took profit. They shorted it, caused the drop, and are buying in at lower prices. That was an option you talked about. And then the last scenario was that this last downturn we saw was just purely based on Trump's words on Taiwan and crowd strikes, mishaps. It was just kind of a little mini black swan event, and we're going to buy the dip and we're going to be good. So talk about two things, and then I'll get out of here, man. Like, talk about those three scenarios, and then you talked about how we're playing it here at Prospero moving forward.
So the three scenarios, and I mean, I already think we're seeing more of scenario one than the other three.
Interesting.
But oh no, I mean, I guess scenario three than the other two. Sorry, I reversed it.
Stop this.
Yeah. So basically on the first one, I think there was a lot of talk that AI could be, AI tech could be, massively overvalued. It was a bubble, a lot of that. So basically what happens, what ultimately pops a bubble, a catalyst, right? So you always have to respect that if there's a lot of that kind of chatter, that even if I didn't believe it, and I didn't really believe AI tech was a bubble, that if enough people are saying it, it could be treated that way. So that was something that I was, pretty concerned about. I wanted to make sure that that we weren't dealing with that. So that's why we kind of had a lot of tech hedges. Anything that we went long, we had a hedge on the other side this week to respect scenario one. Scenario two was that there was opportunistic shorting around scenario one. I mean, so like opportunistic shorting to kind of like feign a scenario one, because they said, okay, maybe we can scare people off. I want to own tech at a lower price, so I'm going to make money on these shorts and then buy tech back lower. And then the third scenario was, and that could have continued for a couple of weeks. And then the third scenario was, it was purely news driven, and people were going to get back to those names once kind of the news died down. I basically said that, we still think there's value to AI. So I really believed in scenario 2 or 3 above 1, but we did prepare just in case it was 1. But I think there's pretty clear data in the market today saying that that it's not a bubble. A lot of people are getting back to these tech names. The Mag 7's coming back. Now, whether this is, I'm just leaning towards scenario 3. There could always be these little corrections on the way down. And we're certainly seeing a volatile market today. But I do think this is a good step in showing that it's probably not a bubble, and maybe there might be more, shorting that happens around the volatility, and we're going to be very cautious. But yeah, I think the market's come back pretty strong today on a lot of names.
It was pretty funny. I was literally in the process of writing the letter, talking about volatility, and just talking about how Trump's words last week on Taiwan was going to make the stock, was what made the stock market fall. And then literally in the process of me having that conversation, Joe Biden announced that he was dropping out of the race. And so kind of proving your point right there. But it seems like things have smoothed out, at least since I've gotten on the call. And so hopefully we're heading in a good direction.
Yeah, I think one of the things that I think a lot of people were saying is, and it's true, the market doesn't like uncertainty.
Sure.
And I think especially last week, another thing that was going on was that, the rumors around Joe Biden maybe dropping out were kind of swirling. So I think the actual, I think that he actually dropping out ended up being a positive sign for those reasons, where it's just like now people kind of know what to forecast. They don't have to like forecast an unknown. Who knows who's kind of, who knows who's kind of president, who's going to even run for president. But yeah, I still expect a volatile, based on what we said last week, we're going to continue to say, like, I still expect a volatile market through next week.
Well, George, I appreciate you having me in today. I'm going to hop off and just be a normal listener. And man, you guys have a great week, and hopefully we'll see you next Monday.
Thanks for coming.
Thank you, Matt, for covering the newsletter and a lot of those topics. I think that was a great start to the stream. I think before I get into the topics that I brought, we should kind of cover some of the questions I see in our chat right now. I think starting off, two stocks we want to be looking at in Prospero and see how they're looking: SMCI and CrowdStrike. And also
Yeah,
Sentinel One, I see somebody brought up.
I mean, the hard thing about SMCI is if you look at net option sentiment, it was going down all week. And I was pretty excited about this event of it getting added to the QQQ. And my theory was that, I mean, the dark pool was so high, though. That was the other thing. My theory was that when it did indeed get added to the QQQ, it was gonna start to go up. Doesn't look like that's the case. I mean, it used to be that places could, kind of, they had to buy the shares when it got added, but there's a lot of ways around it. So it's not a guarantee. And I did post something that said, 64% chance that it goes up according to that article that I read. So we were betting on pretty good odds. It's a little disappointing, but the other side was net option sentiment was going down. There were counter signals, but the way that I saw it was, we were going to hedge, and if it didn't happen, I didn't think, there was huge upside if it did in my mind and much more limited downside. And you saw, even though it was like, it's not the best day today, like it's not a huge downside. So I think that part of my thesis was correct. I mean, I even got out of half the position this morning just because I was like, I don't really think it's happening. But yeah, it just shows again, that if you look in the app, that downtrend on net option sentiment was not looking very positive. And I'm always kicking myself a little bit for not listening to that. I mean, it's possible it could still go charging up. I'll probably at least hold on to one position just in case it does. Um, and I would say, like, even for the next few days with the way like dark pools work, there could be, basically acquired shares that, aren't hitting the market price until later. Um, so yeah. And I mean, you always, like, you never know how these places are allocated before. Obviously, like, if you have a big, all that has to, no, I'm at 2. I can't be at 1.5. We don't do fractional. Um, we don't do fractional shares. That would be very confusing. Um, but yeah, we have 2 positions. We'll probably hang out there unless we see another big rundown. But yeah, I mean, this stuff happens. It's a very hard market to play. I think we had some good other calls today that I'm happy with. But yeah, we'll keep monitoring. I mean, it's still a stock we love long term. But it doesn't look like this event is going to be what we hoped it to be. Or, I mean, it could go, the thing about SMCI, for those that watch it, I've seen it charge like in the second half of a day, in the last hour of a day. You were at 2. No, I was at 4 and I cut 2. You can see in the sheet. I can post it again. They haven't officially been, I just cut them in the chat, but as in I like sent them to paid subscribers. But there were 4, and via chat I cut 2. They haven't been eliminated yet in terms of the actual log of the exits. But we get these questions a lot, and we keep a pretty good log of these positions in here. Like, if you're not a paid subscriber to the newsletter, you're never going to get like real time. But generally, that document is never like more than like 24 hours behind.
Okay, so I scrolled up to the top, and I don't want to miss David's question. Will the new technical flow metric be available in the app for each company?
Yes. That's one of the things we're working out. There were some in the newsletter that weren't covered yesterday, and we're just making sure that we get full, like, closer to full coverage before we get it in. some other tests. But we're getting close.
Okay, and so I just want to put a bow on this CrowdStrike topic. They're down 25% since I think last Friday when this all kicked off. I think there's two schools of thought where when a cybersecurity thing like this happens, you see the importance of the company and all the things they affect, and it kind of boosts their business at least long term. And then there's another school of thought where now they can't be trusted because of this hack. So where do you fall on that? And do you think CrowdStrike at a certain point of decline is a good investment to take?
Yeah, I just want to. The last thing on SMCI, I think was a good point brought up. Like, yeah, I mean, anything, and this was asked to me on the newsletter. Like, I know things have been pretty volatile and how I handle it, but just as a reminder, like, the newsletter is just my best example of how to manage risk. Like, for a very simple rule, anything that is above 80 in upside breakout, we recommend as a 1 year plus hold. So for most people, like, it's just a question of if you want to follow some of my risk adjustment moves, maybe not others. Like, you can still kind of go by that principle and go by long-term holds, which is what's, best for most people. But like, the way that I think about it is like, I don't really need to help you. Like, me just putting everything in a portfolio with it greater than 80 upside breakout doesn't teach anyone that much. So that's why I do it that way. And then, yeah, in terms of CrowdStrike, um, I think it does remind some people of, I would say, the fragility of all this, because we were just basically talking about a software patch, and everything was brought down for that long. Like, I think you got to imagine what would happen if it was like an actual attack. I mean, the argument could be said that like an attack could, in theory, be fixed just as quickly. We've got great people to fix those kinds of things. But yeah, to me, I would always say that I didn't want to put my password into a password company, um, because it made them, a hacking target. And sure enough, that happened to LastPass. And to me, I think this kind of reinforces that, you know, A, I think everyone wants to have redundant systems. Now, I mean, it's pretty expensive to do that, but I think a lot of people are going to think about that. And maybe you have a redundant system that's supported by, two big vendors, maybe a smaller, more custom one, and a big one that might be, a little cheaper. But I think that that's the big thing, and like, I know public companies like never want to spend money on anything. But I think that, especially like the embarrassment for the airlines, like, I cannot believe they can't just like bring down one system and bring up another redundant system that, you know, that is just as effective as any bug, anything basically that, you know, goes wrong. They run their internal tests that spins down one if there's any anomalies and spins up the other. So that's one thing that I don't. And I mean, the answer is that nobody ever wants to spend any money. Redundant systems are expensive. But yeah, I think that's something that more and more places are going to have to start thinking about, because it's just like, well, these companies are massively profitable, some airlines more than others. And this always kind of came up when we were talking about bailouts. And it's just like, okay, these airlines got bailouts and now they're super profitable again. And they do things like, raise ticket prices and shrink seats and all that stuff. So it's just like, I think there's a conversation to be had about customer service, and hopefully that it gets better and people start thinking about these things. Because to me, you buy a plane ticket, or like, I think it was probably air traffic control that grounded the planes. I don't know exactly. I read the story, but even more, air traffic control, airports, whatever, they should be paying for redundant systems. But in terms of CrowdStrike, they should lose a lot of business. Like, I would consider this to be a pretty unforgivable thing. And it's one of those things where I forgot I forgot what it is. It's like there's like a movie or something that someone like, oh, it's in The Wire. Like it's early on in The Wire, and basically like this like one of the cops like betrays the guy running things, and he's like something to the effect of, well, I'm going to keep you on because I know you're the guy that's basically not going to betray me again. And there could be something to be said about that and CrowdStrike, where like maybe they're going to work that much harder than any other security firm to not have another fuck up, because that would be that would be, you know, a complete death for them. But no, to me, like I'm looking for like I think a lot of companies should pull their business out of CrowdStrike. To me, this is a pretty unforgivable mistake. But yeah, like the flip side is anyone could maybe be that sloppy, and maybe you'll just run into the second one, and you'll get the CrowdStrike outage, and then whoever else you switch to, well, CrowdStrike is still running well. I think, you know, what it comes down to, and I think a lot of things come down to this these days, is that we never seem to have very good oversight from, you know, the government entities or anything or whatever. It always seems to be we get oversight, and kind of overbearing oversight where we don't want it, and then, you know, zero oversight in areas where it would be quite useful. um because that could have been pretty catastrophic, and I do think it really couldn't hurt to make sure that things like this, you know, don't take down the economy in this way. I mean, there's definitely ways that um you can make more, you know, you can require certain checks, you can require certain protocols. So yeah, I don't know. It's just kind of very weird when we see stuff like this. And I would say more than anything, just a reminder of how fast and loose a lot of these companies play things.
Well, your idea of companies being either required or just doing it on their own, of having redundant systems, that sounds like it would be music to the ears of like software companies and cybersecurity companies. Um, they could just be like kind of insurance, get paid for just being in the background without even having to provide a service unless it's needed. So maybe we'll see that in the future. We do have a story from NVIDIA. They are working on a new version of their flagship AI chips that meet the Chinese market export controls that the US has placed on a lot of these top AI and chip companies. It's tentatively named the B20 chip, and it could ship as early as Q2 2025. I think you've talked about, you know, how good of a leader Jensen Huang is already on the stream, but getting in front of this kind of concern that's been weighing on Nvidia stock has got to be a great move for them, right?
Yeah, I mean, I don't know how long they've been working on it, or they just heard Trump say that, and they're like, "Oh shit, we better like, we better say something. We're gonna start working on it." Um, but yeah, he's very sharp. I think that's why, you know, you saw them become the most valuable company in the world so quickly. Like he is very aware of the news cycle. He's very aware of, you know, how to tell the right story, how to manage the fears of Wall Street. Um, and this is, yeah, just another great move on that front. Like I do think it's kind of funny that it's just like where the lines are drawn with these chips, and like, you know, I don't know, like it would it wouldn't surprise me, but I feel like my experience with government is they're not very tech savvy. So like they're drawing all these like probably arbitrary lines in terms of like the functionality of the chips. And like who even knows? Because like a lot of the times if you get like a lot of chips, like you can mimic the functionality of like one faster chip. So I think when you think about this kind of thing, and I don't know, there might still be quantity limits or whatever. I haven't really dipped into the laws that much, but basically the point I'm making is, you know, I don't know who in government is actually like thinking about this, But it would be funny if like ultimately the number of chips, even if they were a little slower that were going out, were really not ultimately like limiting the capacity that much or in the ways that they wanted them to. It was just like, more of a story. Um, but yeah, I mean, the thing that like one of the reasons I'm saying this is like I was on a panel with the former CTO of the United States, and very nice, very smart guy, but he was a public policy major at Princeton and never really had a technical background. So that's one of the things, and that's like I've got a specific and a general. Like the general is I never really see people in government doing like having that great of like policies um around chips, like, or kind of any of this stuff that shows a lot of knowledge. And then there's the other side that I meet that and I'm just like, how do you have someone that hasn't been a technical person be the CTO of the United States? Like, I don't even know like startups that allow someone that haven't been a technical person to be the CTO of their small entity. So yeah, I kind of ever since that happened, I've thought of it and I was like, oh yeah, there's maybe a practical reason why you see some of this stuff and you don't always see the most tech savvy moves um, by the United States government, but that's not always true.
So as was covered in the opening of the stream, we're seeing the markets kind of rebound and like unwind the unwind that we saw last week, where big tech stocks and AI and chips are all recovering. We have the true kickoff of earnings season. We've already seen big banks, a lot of them report pretty good so far, but we have stocks like Alphabet, Tesla reporting this week. We also have Chipotle, which is a stock we've covered a bit, also reporting this week. So a lot of big companies, a lot of new data that's going to come into the market this week. How are you feeling heading into those earnings? Anything specific in those companies that you're looking for or think are important to watch for this week?
Well, I think that one of the reasons I got into Tesla, I got into it for like, yeah, like Trump is looking more and more likely to win. And then he's got this like stronger and stronger alignment with Elon Musk. I gotta feel that like, I gotta feel like at the very least, if there's something that is said to harm the stock market, like there was last week, I don't think it's gonna be coming for Elon Musk. So that's a nice like high growth, high potential stock that I'm guessing will be insulated from that. But the other thing is they beat their delivery estimates, right? And so like earnings coming this week. So I feel like it's not a terrible bet to bet that if they like beat their delivery estimates, that they're also going to do well in earnings. And like they've been, there's we talked about the way they were like recognizing revenue before. I'm potentially recognizing full self-driving and things like an auto park or whatever. I don't know all their products that will, but they were recognizing them early. Now, the way accounting works is you have to be reasonably like assured that you can get something. Now, if they're having even like, private conversations that they can validate um with um, with government potential people in the government, and they think that makes it reasonably likely that full self-driving gets rolled out. I mean, they play pretty fast and loose with it. It's not how I would recognize revenue, but we've already heard that they're pretty aggressive with that. It's possible that they could really up their guidance based on you know what they're forecasting as likely increased full self-driving revenues. um so yeah, I think that's something that has made me, bullish on Tesla. Um, I think Google's going to be very interesting because we have to see, and they did talk about it last time, how like their Gen AI has like started to be monetized. And obviously you have cloud performance, which is going to be huge. But those are the two things I'm watching for in Google. If Google Cloud does well, if they're showing growth in Gen AI revenues, if they're forecasting well for, I'm not sure they'll forecast in Gen AI, but like if they're forecasting well in Google Cloud, I think those are going to be, fantastic things for the market. I'm not likely to play that, even though I am bullish on how they're going to do in cloud and on how they're going to do in Gen AI. But those would be the primary things I'm watching for.
Yeah, I think the last point you mentioned is very interesting to me. I think, this whole AI frenzy, for me at least, kicks back to when OpenAI launched ChatGPT, which I think was like in the fall of 2022, if I'm not mistaken. So we're closing up year two, starting year three of this whole AI, tech revolution. I feel like these companies really have to start showing the profits that they can make from this tech pretty soon, right? Or do you think the market can maintain a long-term view of it?
It's a good question. I think they have to show improvement, right? I think, people were happy with Google's numbers. I don't know them off the top of my head. It wasn't crazy, but like you just have to show improvement. That's the big thing. I think as long as they're showing some growth, I think it'll do well.
Hmm.
But yeah, I think there's a lot more pressure on Microsoft than Google, because Google just really has to maintain a lot of, for example, a lot of what, some people are saying about like ChatGPT and Microsoft is that um, it's going to start taking over Google search. We haven't really seen that happen. And we've seen it happen again and again. And people have like kind of priced that in. Like people are really expecting Microsoft, I would say, to show more than Google, especially because like I think Google has to do is like maintain search and grow their generative AI business a little, show, robust growth in, their cloud performance, that they're tackling, more people there. And what it is, a very big growth market for that. But I do think there's more pressure on Microsoft to monetize generative AI, because they're the ones that made that big acquisition, right? They're the ones that, that's kind of, they kind of stake their future on that. And part of staking their future on that is, coming for Google. I mean, I think it's pretty like, what is going to be very helpful to them is they do kind of have that Apple partnership rolling out. I don't know when, but I think, I think the promise of revenue from that should kind of be a good backstop, even if people are a little disappointed with how their generative AI unit is performing. But yeah, I think Google just has to show some incremental progress, where I think, Microsoft has to keep getting people excited.
Hmm. Yeah, it's definitely going to be interesting to watch play out this week. And we're going to spin from some AI mega tech stocks to another one, Meta. But this story is kind of, I mean, I guess it's within the scope of AI, but it's kind of alternative to it as well. If you were here on Wednesday, we talked about a story of VF Corp being or selling the Supreme brand to this company, EssilorLuxottica, which is the maker of Ray-Ban. It's also the company that Meta is partnershiped with to make their AR virtual reality glasses. So um, it came out that Meta is in talks to take a 5% stake in that company. Uh, Going down the road, do you think it'd be a cool company for Meta to acquire one day? What do you think of Meta getting into the fashion world? How do you feel about this story?
Well, one of my this reminded me of like one of our favorite topics to cover, um, which is that we talked about like the Google glasses and how bad Google can be at creating products right now, and how Sergey Brin is a pretty cool looking guy, uh, almost always, except he looked like a real idiot in those Google glasses. And that's kind of the story that we tell um, to talk about how, Google is not always that great at like building products or validating products versus like something like Amazon. But what I'd say is like interesting about that is you take the flip side. Mark Zuckerberg, not known as a cool guy, wanting to get into the AR space. So maybe I think that, like, perhaps the lack of confidence in his ability to pull things off, or just, what that comes from of saying, like, okay, maybe I don't know how to create like a fashion item. I'm not the best person for it. I think that could be helping him, because I think that's very smart. Because I think that, like, a lot of people, I mean, and obviously Apple is the exception here, because they know how to do tech and design in a way that, makes it, like, I don't know if I want to say fashionable, but makes it cool, which ultimately, like, is what a lot of people want from fashion. They want to look cool. So I wouldn't say that like Apple products are particularly fashionable, but they definitely are cool. So maybe they like do like a sidestep of what everybody's trying to get to in fashion. But yeah, I think if a company that's not really known as cool, like Meta, it's very smart for them to get help. And I think this is absolutely, we all know AR is like a part of their future. They changed their name for it. Um, I don't know if that's AR or that's, a whole different reality or whatever, but they're playing a lot in that space. Um, so yeah, I think it's super smart for them to start thinking about whether it be partnerships um, that might get them, exclusive manufacturing or a deal on manufacturing or an outright acquisition. And, that kind of plays into what we were talking about last week, Stephen, when we were talking about how, like, acquisitions can get liquidated because they don't mesh. So this could just be a dipping of the toe in the water to see if this is the right brand to work with before they make a larger chunk or a larger acquisition. So yeah, I think this is smart by Meta. I think, as we talk about a lot, like, since the metaverse, Meta is making like smart decision after smart decision, and that's why it's, consistently one of our favorite long-term stocks to own, and consistently like at the top of upside breakout in Prospero. They just are. I think not only obviously do we trust them, that's a reflection of, I think, a trust from Wall Street, and just like a consistent um consistent vote of confidence that a lot of people are even now still undervaluing the company relative to the way they grow and relative to their profitability.
It's funny when you brought up how Apple knows how to make like good looking products. Nissan commented in our chat, do they though? What about their headset just getting dropped? And you've kind of talked about before, like the old school Apple and the new school Apple. And it's funny, like when you were mentioning them, you were kind of thinking of the old school Apple, but maybe there's been a shift there in recent times.
Yeah, I think I definitely was. But I like VR. AR headsets are supposed to be fashion items. VR headsets are not supposed, you're wearing them on your face. You're not really supposed to be interacting with people. So I do think that's a different thing in terms of like fashionable, but like, people love Apple Watches, iPhone, like, it is correct that they haven't come out with like a new product that's, cool, but like, still, the phones, the watches, I think they're viewed as like the coolest, you know, gadgets. It's pretty hard to unseat. They have a huge, like, kind of block of people that I think buy those above other products.
So the next topic is one I wanted to bring up to kind of help investors catch bad investments before they happen, hopefully. So a company, SunPower, is down 95% in the last year, 75% in the last week. And this isn't like a startup, like futuristic, like this company's been around since 1985. Um, Obviously, has been just a terrible investment. Is there If you're someone who has owned a stock like that, how do you move forward from that? Like, what's the best thing you can do to kind of put it behind? Because I feel like some people would just quit in the market when that happens. How do you overcome it and move forward? And then also, how do you spot an investment that's that bad in the first place so maybe you don't make it?
What's the ticker on that?
I believe SNWR or SN. Yeah, I think SNWR.
Yeah, I'm just gonna take a look. I want to look at their 1-year chart. Yeah, Jesus. So yeah, we've shorted this at times. I was trying to look at their like max market cap. But anyway, like the first things first is like I think unless you're talking about a large mega cap, and even then you want to be careful. You want to have a quick exit plan on small caps, like or even mid caps. Like I bumped up on that a couple. I dropped a number this weekend because like generally like I'm unwilling to lose more than 20%, and if 10% happens quickly, I'm probably out. And I think that that's like the first and foremost. Like it's it's very easy, especially with like the retail mob these days, if you're in something, for people to convince you like, oh no, it's coming back. Like, this is a good value, buy the dip. Like, and I just don't think that's a good strategy. I mean, obviously, one of the things you could always look at Prospero. I shorted it a number of times. Prospero has hated this stock for a long time. Pretty low net option sentiment always. I think high downside breakout, so that's one of the things that Prospero can help you with. But, in absence of plugging our product too much, I really just think that that is a rule you've got to live by. Like, whether it's putting a stop loss in or it's, kind of monitoring yourself, looking at the numbers roughly. It's just like, unless you're dealing with like a stalwart, highly profitable company, you got to be out at a 20% loss. Like, that's just, I think, a pretty hard and fast rule for me on any small or mid caps. And hey, like, I don't mind getting back in if it's gone back up 10%, right? Like, just to be sure that you're seeing some recovery, I think is super, super important. Um, and you'd rather it that way, or maybe it goes down 20 and it goes back up 15. Like a lot of these, especially small mid caps, you're getting them to run a lot more than 20% the other way. So I see no harm in that in the risk management practices, but also just like generally, unless you're in something like this right now where it's just like a pretty clear rotation and like I'm buying small and mid caps. Unless like I would just rather own, especially on the long side, large mega cap stocks that that you're timing right. Because like if you look at the charts on any of these large or mega caps, like they're all going up, 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 right? It's not the same for small and mid caps. Small and mid caps are so much more volatile. So I'd almost always, and they might be a little overpriced now. They might be. I don't necessarily think so, but there's an argument to be made, right? So there's an argument to be made that maybe now is not the best time to get into large caps or mega caps. And that's fair. But, either there'll be a dip and you'll get a better price, or there won't be and you'll be kicking yourself because there was a little dip and this was your chance to get the better price, and they're going to resume taking off again.
So just the other point I think it'd be nice for you to speak to. I think obviously maybe not as bad as SunPower where the stock is down 95% a year, but there's probably people in our chat right now that have had an investment that just was performed extremely poorly. For the psychological like effect of that, how do you move forward? What's the best way to like take steps to become a better investor from it rather than just like spiraling?
Well, I think that there's two best ways, right? One, take a step back, start paper trading. Take your money out, paper trade. And, if you can, write down what you think you did wrong. Write down the lessons. And like we say, try to build a process out of that. Look for new methods, new mistakes, build your new plan out of what went wrong the last time and make it your own. Because like most of the way that I see people going like completely wrong are when they're just like taking other people's stock picks, throwing money in. And that's really not the way to go. So the other way is, and a way that I always recommend go buy a dividend ETF like SCHD, right? And you don't even have to reinvest dividends, right? Buy a dividend ETF, throw it in. When your dividend money comes out, you can start throwing that into the market, because that's, kind of flow off your dividends. And that's an option if you're not, paper trading. To make sure you have a stable cash flowing base as you start to experiment again. But personally, like, what I would recommend to anyone that's had big losses, I would say throw you maybe even both strategies at the same time. Throw your money into a dividend stock until you get back what you lost, reinvest dividends, just build that money up while you paper trade. And then it's not until you're confident that you had a real system of your own, a real process of your own, then you get back in.
I think that's some great advice there. We are approaching the final topic of the day. So let me just say to everyone watching, if you enjoyed the content of our stream so far, be sure to like it up. Let's hit that like button, get double-digit likes today on YouTube. I know Twitter, we're probably already there. So, but keep it going. If you have any questions also that you want to address before we do our switch over, now's the time to start commenting. Without further ado, the last topic I have for today, the Bitcoin conference is taking place this week, which I know you're probably excited for, George. There's a lot of hype going into it. I believe Trump is set to be speaking at it, which is sure to produce some headlines. On Twitter and the crypto space over the weekend, a lot of hype about Elon changing his profile picture to being laser-eyed. I believe Coin is one of the stocks that's rated highly in our signals on and off recently. Are you going to be playing this event at all with our signals? Or do you think there's better opportunities still in the market and you're not really interested?
No, I don't. I mean, maybe Coin is something that, like, I might play generally, but there's too much volatility in this market right now. I don't think I'm very interested in it. But I will say that, like, overall, if I'm feeling more stable in the market, cryptocurrency becomes more interesting, or coin, or, like, BLOK is the, blockchain ETF that we recommend. If Trump, wants to, go into that. And I do think, we say it, he's running a savvy campaign. Like, I think the way he's, saying some positive things about EVs, maybe that's just for Musk, but the way that he's going for, Bitcoin here, reaching out to young voters that way. It's smart. I'd say, especially in this day and age, I think we hear a lot of, like, oh, like, I don't like either of the candidates, but at least this one does this. So, like, I could absolutely see people, like, going into the voting booth and voting for Trump that just care about cryptocurrency, that could say, I don't like either of the candidates, but at least Trump is getting me some positive momentum on cryptocurrency. So I think that it's a smart move by him. And I also think that, depending on what he says, like, because there's, like, him being, going and saying he likes cryptocurrency and whatever, to promising any kind of policy, right? If he starts to talk about policy, then I think it becomes that much more interesting. But yeah, I think it could be, like, especially if he just is, like, saying fluff there, I think it could be a buy on the rumor, sell on the news thing.
That was just the thing I was going to ask you. Could it be a buy the rumor, sell the news event? I guess if he doesn't deliver any specifics to his plan when he's president on the Bitcoin
Yeah, I think if he
strategy.
just shows up. Yeah, I think if he
Yeah.
just shows up and says, like, I love you guys. I love blockchain. I'm gonna make America great again. Like, I feel like that could be a buy on the rumor, sell on the news thing. But he might come with specific policy. There's a lot of people in the government that think being a leader on cryptocurrency and the blockchain is important. It's really like I've gone to a lot of blockchain events where there's like tons of blockchain lobbyists, and it's always very interesting to hear them talk. But yeah, I think that I don't disagree with that, by the way. I think us becoming like, I think anytime um, the US is leading on innovation in anything, it's a good idea. That's what we do best. But we've got to do it in the right way, especially as it relates with like cryptocurrency, blockchain. We've seen how a lot of, let's call them the wrong characters have kind of made it to the way to the top of that industry, and them getting massive asset bases is not a good thing, right?
Mm-hmm.
But if we can become a leader on innovation where we put the right guardrails in place there, I think that could be massive for our country. But I mean, we're already behind other countries that are doing that. So we've got to speed up if we really want to make an impact there. But that being said, I feel like anytime America is trying to do anything fast, we do not do it safe.
All right. I do see we have one question before we do the switch over from Nissan. How do you search IWM on Prospero? It doesn't come up. I mean, I could even answer this one at this point, George, if you want me to.
Go for it.
Yeah, so like if there's not, we need to cover a certain percentage of the stocks in an ETF or index for it to be added to Prospero. So if it doesn't meet that threshold, it's not going to be in Prospero. And because the small caps, it's a lot of companies that aren't on Prospero in the IWM, so it's not on there.
Yeah, almost perfect. We need 85. We need about 85% coverage, or we need 85% coverage to put it in there, because we don't want, like, otherwise we're not really covering the index. Like when we give a net option sentiment, right? If we're missing, like in our view, more than 15% of the stocks, then we're not giving you a real net option sentiment on IWM, and we wouldn't want to do that. So yeah, we are working on that. One of the things that we want to do when we're done with our seed round is like work on covering smaller stocks in the right way. I mean, they can be. Actually, net option sentiment was the wrong thing to say, because there are options traded on IWM. It's more like profitability and growth and upside and downside. Those primarily are the ones that require things like analyst coverage and estimates and things like that. So if those stocks are not covered by analysts, then we can't give a profitability. We can't give a growth. We can't. Yeah, we are. We kind of just started going out for it. We have a lead investor. We're still figuring out. We want to do around our trade alerts launch. We either want to do like some kind of crowd fund, maybe a Kickstarter, maybe both. We're figuring out kind of what we're doing with kind of like the larger investors now, how they feel about it. But yeah, it's all underway.
Now, and before we do our switchover, I have to ask George, the camera's perfect today. Was it an easy fix, or were you messing
Oh my
around with it?
God. I don't like, it's something about the internet. And I just reset my router today. And I'm hopeful that that's the thing. But I think last time it was like the fact that like the computer needed an update. And I think, how, God, hopefully we're not dealing with anything like, and I think it needed an update the time before too. So I think it was the same problem. But yes, it was run through numerous tests this morning to make sure it was ready to go.
Mm-hmm. Well, I think it's been a great stream so far. I think we're ready to do the switchover. We'll see you in the Prospero laboratory. All right, it's just me and you chat now. Great to see so many comments today. Great to see so many people tuning in. Comment your favorite part of the stream so far. It'd be good to see what you guys are enjoying. Right now, as we're doing the switch over, I'm going to be giving you guys the updated QQQ and SPY net option sentiment readings. So wait, let's take a look first at how they actually have been performing throughout the stream. So QQQ is up 0.8%, SPY is up 0.5%. Looks like they kind of slightly dipped and are recovering. Not too big of moves though. So let's look at the QQQ first. Okay, so we have the QQQ at a 38 net options sentiment reading, which is quite lower than it's been in the past several weeks and months, but it's also recovering from the low of 29 it hit on July 19th. So I think that makes it a very difficult market to read because it is low, but it's also recovering. So tough to read right now. Then we have the SPY with a reading of 40, and it looks very similar to the QQQ in that it's recovering from a low of 35, but it's also a little bit lower than it's been in the recent history of the signals that we were seeing. So I think it's a difficult market to read one way or the other right now. I see a comment, margin call. What are your thoughts on Microsoft's role in crowd debacle? George, do you think Microsoft had a role in the CrowdStrike debacle?
What do you mean by a role?
I don't know. We just got a question, so maybe specify the question a bit, and we'll get back to you on that. Maybe there's an update in the story where Microsoft had something to do with it.
Yeah, that's a tall accusation.
It all leads back to Microsoft.
Yeah, I mean, yeah, I will say this. I believe Microsoft was involved in any conspiracy, but I'm not accusing them of any specific conspiracies either. They have a lot of lawyers.
Yeah, I did see that in the article I was reading that for CrowdStrike, the lawsuits and everything they think are going to total over $1 billion in like covering that. So that's pretty crazy.
Yeah, but I will say this about the airlines, all that stuff. I hope they lose. They should be responsible. You should be responsible on one computer system for flights to take off. I get it's a stupid error, and maybe they only are gonna win because it was a stupid error. But to me, it's one thing if you're a medium-sized business or whatever, or even my Schwab was down. Schwab should have a redundant computer system. I mean, it wasn't down; it was just giving me an alert that some things weren't working. But yeah, that was the big thing for me.
I did see some conspiracy about Schwab being down. Obviously, I don't even know if I want to mention it because it's all just the dark cesspools of Twitter. But
what was it? I mean, we can say just say it's a conspiracy. I don't care. I'm not one to.
It was just that they acquired TD Ameritrade, and there was some weird thing with the dates lining up of TD Ameritrade options positions being placed onto Schwab, and they thought, and the conspiracy was that Schwab was not able to cover everything.
It was one of those. It was one of those.
Yeah.
It's always the margin call. Which is just so even when we talked about that, people always get upset when I don't know if margin call is gonna get upset. Margin calls here. But it's just it's just always funny how quick retail investors go to the margin call thing, where it's just that is just such a rare event. It does happen, but one of the things that it doesn't happen during is a bull market. There's already got to be stress on the market before there's a margin call. That's something that doesn't seem to get across to a lot of people. No narration today, Stephen?
I never know when to start and how long to give you a typing thing. What I was gonna say is, I was thinking maybe that's why I wasn't reading, but we're seeing the QQQ and SPY kind of, they're at low levels, but they're recovering from like lower lows. So does that make it like really tough to judge one way or the other?
Yeah, I mean, this whole market is tough to judge. I mean, part of me just wants to actually close more positions today, like whether they're wins or losses, to just like, yeah.
Mm-hmm. So technology is the only thing that is actually looking good here, but we may look for energy shorts in the beginning of the trend down.
Huh. Missing some words there. See, with you reading, it helps.
Uh-oh, is the rotation canceled? We aren't going to make any big moves today, but I guess our viewers will have to tune back in for Wednesday's stream. This looks like either a correction from last week where large cap growth was hit, or maybe last week was the correction.
I'm glad I got rid of 3 of those SMCIs. Do I want to get rid of a 4th? No, I don't think so. Oh God, did Slab do well? I was wondering if I should keep Slab. How well did it do? It's up 4. God damn it. Meta's doing well. What is this PLD? Can you tell me the net option sentiment trend on PLD?
Yeah, so PLD is at 40 now, which it was at 75 to open the day. So it's kind of gone lower. Pretty volatile trend between 30 and 80 throughout.
Yeah, we could have just caught it in like, it's been in a pretty good uptrend. I'm going to look at PI too. Yeah, that's more volatile. All right. We're not going to tinker too much with these small caps, like we said. But since we have 2 of these. It's all on the long side. Maybe CSTP. What's our new real estate thing? All right, let's look what's going on the short side. Should have got out of this faster. Okay. All right. Anything here look particularly good? I think we exited Microsoft. It's time to get back in. Google jump. I want that going. How's Melly? I want another Melly. We'll do one coin. Yeah, we'll do one coin off that story. What's going on with PWR?
PWR 82 in net options at the highs. What do they do? PWR. All right. Let's look at our shorts. Lost my mouse. Anything else? What is ISRG?
Intuitive surgical. Oh, it's a good trend. All right, what's new on the shorts? All right, what about, are frequent energy victims equity lifestyle properties? Interesting. No. All right, I feel good about this. Okay. We are done.
Very interesting market right now to watch what develops this week. Obviously, earnings are going to play a huge role. We'll have Google earnings in the next time we come on live stream, so that'll be interesting to talk about. Without
And
further
Tesla.
ado, Tesla is that day, right? Or is Tesla Tuesday as well?
Tesla's Tuesday.
Oh, okay. Yeah, wow.
After
Yeah,
close.
we'll have a lot to discuss. I'm sure the market will probably be showing decide if it's going to be bullish or bearish big cap tech after that. So
It's going to be interesting. All right.
we'll see everybody then. Thanks for tuning in. Bye, everyone.